Good morning everybody, this is Lara with your quick update Monday to Friday for Bitcoin, Ethereum and XRP. Just before I get into it, as usual, if you are not already subscribed here, I recommend you do so because I'm updating these three markets 5 days a week, Monday to Friday, and I'll give you an update on the weekend if something big happens as well. You're going to get my 15 years experience, over 10 of which as a chartered market technician on these three markets for free, which is a pretty good deal, so subscribe so you don't lose my channel. Getting into Bitcoin, yesterday I identified the possible little pennant pattern and I said that we needed to have a close above resistance with support from volume in order to have an upward breakout. So far, today's session is moving up above the upper resistance line of the pennant. If we can close above this at the end of the session, and if this session has stronger volume than the previous session, then it'll have support from volume and then the target comes into play. I've calculated the target from the flagpole from this low to this high and added that distance to the breakout point. If we do see an upward breakout along the way up to the target, I'll expect resistance at 48,000. It doesn't have to happen, but look out for a possible pullback before price can break through that resistance area. So far today, there's no support from volume, but it is only just gone midday in New York, so there's still quite a few hours to go. If we don't have support from volume, then the upward breakout will be suspicious, and I'll redraw the trend lines for the pennant or possibly discard it. On balance, volume is still in a range, no signal. ADX still tells us there's no clear trend, so reverting to a model of stochastics plus support and resistance tells us to expect possibly a continuation of a downward swing to support to end only when price finds support and stochastics reaches oversold simultaneously, although that didn't work last time, and so stochastics may only end here about the mid-range and the downward swing may be over. I know that's not very clear, but that model is sometimes not particularly useful. Sometimes when you've got a great consolidation with really clear resistance and support and stochastics is swinging from overbought to oversold and all the way back again as price hits resistance and support, that model can be very useful during a consolidation. It just doesn't always work great. My Elliott Wave count for Ethereum, I'm adding a trend channel to this little pullback for minute wave 2, unfolding possibly as a zigzag, A, B and possibly C extending to find support at the log function of the 0.382 ratio at 2018.35. Minute C needs to be a 5-wave structure. It may be unfolding as an impulse with 1, 2, 3, 4, 5. So a third wave down needed to continue. 2 may not move beyond the start of 1. If we see a new high above 2332.24, that means that minute 2 is not unfolding as a single zigzag, and I'd probably relabel it a combination unless the new high above that point came on an upward session with good support from volume, and then I'd label minute wave 2 over down at the low for 18th of December. I'm going to identify potentially a little flag pattern for Ethereum. It's not the most perfect looking. For it to be perfect looking, the trend lines should be parallel, like a little channel. So maybe we should adjust the lower support line here. But like a pennant, flags are reliable continuation patterns, and you need to have an upward breakout above resistance on a session which must have support from volume in order to have confidence in the breakout. If the breakout point is 0.2260 and the flagpole is this high, this low, then I've added the flag distance on the flagpole to the potential breakout point. I get a target of 2678. So if we have an upward breakout from the flag with support from volume, this target then comes into play. On the way up, I'd be looking for some resistance. On the way up, about 2,400, maybe a consolidation or pullback about there. Although I think next time price comes up to hit this resistance, it might be able to break through. If it does, I'd look for a back test of support before price moves up and away toward the target. Volume is declining as price moves sideways, normal to be expected behavior during flags and pennants and consolidations. On balance, volume now has a tight little range. For Ethereum, we'll be looking for a breakout above resistance or below support to give us a signal. ADX is still declining. It's getting to a relatively low level, but it's still above 15, so possibly setting itself up for the next strong signal. With ADX declining, indicating no clear trend, reverting to a model of stochastics plus support and resistance, I'd expect a continuation of a downward swing to end when stochastics reaches oversold and price reaches support. Today for XRP, stepping back looking at the monthly time frame, because my Elliott Wave count is the same but my targets are different because I've got more data. And thank you so much to Urska for contacting me and sending me her file from TradingView with this old XRP data that I didn't have, and she noticed that difference. It does make a difference to the target calculation. I'm still going to count from this low to this high, a complete 5-wave impulse, and I know that some people are going to have a problem with that because of the way the third wave looks. I'm used to that though, because within impulses, particularly third waves for crypto, the second wave corrections are time consuming and the fourth wave corrections are really brief and shallow due to the strong upward pull of the fifth wave to end the third wave 1 degree higher. They behave like commodities. I'm used to seeing this in gold. I learned it the hard way many years ago when I started analysing gold. I got used to this tendency in commodities, and I noticed that cryptocurrencies have even higher volatility and have this tendency to a much greater degree. So this impulse looks absolutely normal for a third wave for a crypto. From this low to this high, an impulse labelled cycle wave 1, it's lasted 3 years. Cycle degree waves should last from 1 to several years, so this is about right. Cycle wave 2 lasts 2 years and it's a 96% reduction in market value, or reduction of cycle wave 1. It's a huge bear market. From this low on up, we'll expect an impulse for cycle 3, extremely likely to extend. Now within cycle wave 1, this is what's changed. Primary wave 3, my last analysis had it as just over 4.236, the length of primary wave 1, but now I've got better data. It's 14.71. Now this is much more normal for a crypto, so I thought XRP had pretty short third waves for a crypto, but no, it has pretty normal looking third waves for a crypto. So this is really good. So primary 3 is 14.71 times the length of primary 1. If I use that ratio and apply it to the waves within cycle 3, so using past behaviour as a blueprint for potential future behaviour, because that's all we have to go on, right, is past behaviour, then primary 3 here would reach 27.14 and cycle 3 would reach 40.53. So those are my new targets for XRP. Flipping over to the daily chart, the low of intermediate wave 2, which is within primary 3 of cycle 3, is this low down here. Intermediate wave 3, applying the same target calculation, would reach $9.57 if it's 14.71 times the length of intermediate wave 1. So again, that was the ratio between primary waves 1 and 3 within cycle wave 1. So XRP has exhibited a big third wave that is that long in relation to its first wave. If it does it again, if it exhibits the same pattern of behaviour, then this would be a reasonable target for intermediate wave 3. So that's the logic I'm using for the target. Within intermediate 3, I have minor 1 over here, minor 2 continuing lower as a zigzag, A, a flat for B, and C, possibly now an ending contracting diagonal. For the diagonal to remain valid, 4 must be shorter than 2, so it can't be longer than 2 because 3 is shorter than 1, and the trend lines must contract to meet the rules regarding that structure. If 4 does move higher and it becomes longer than 2, then I'd relabel the structure of minute C, possibly as an impulse, with minuet 2 continuing as an expanded flat. So that's the short-term alternate I can see there, which I've just tried to describe. I'm not charting it because I don't need to for my own purposes. I can just see it looking at the chart. Target's the same as yesterday. Minute C will reach equality in length with A at 55 cents, and there's very strong technical support in that area. So if price gets down that low, then I would expect strong support and a probably downward movement to end. But if this ending contracting diagonal is correct, this target's now probably going to be a bit too low. I won't be able to calculate the limit for minuet wave 5 until we have confidence that minuet 4 is complete and we know where minuet 5 begins. Because the diagonal is contracting, the fifth wave must be shorter than the third wave. So that limits the downward movement for the ending contracting diagonal. So I'll keep an eye on this one, and if this structure remains valid, that's going to give us some really good information in coming days. At the daily time frame, technicals for XRP still finding resistance now at 62 cents. I think I'm just going to move this up to, I don't know, I'm just going to get rid of that altogether actually. Oh, no, I'm going to leave it up here. I'm going to move it up to about 0.675 because that's the upper edge of the current consolidation, but this is a really weak area of resistance. But 62 cents just isn't working anymore. 58 cents definitely is though, and prices bounced off that area from the 18th of December. There's no clear trend, so we'll revert to a model of stochastics plus support and resistance. Price is bouncing up off support. Stochastics hasn't quite reached oversold though, so we may have a little bit more downward movement, testing the area of support again before an upward swing begins. Now, one of the problems with the model of stochastics plus support and resistance, price doesn't always swing in. It's not going to swing cleanly from one to the other. It's going to be very choppy and overlapping. That's typical price behavior during a consolidation. So you have to be pretty patient, and price can overshoot support or resistance before moving back in. That's one reason why trying to trade consolidating markets is best left to very experienced expert traders only. And if you're learning to trade, if you're new, here's one little tip. Just trade the trend. Make sure you're in the direction of the larger trend. Don't try and go against the trend, and avoid consolidating markets. And that's one reason why I use ADX to tell us what trend state the market is in. That's it from me today with a quick update for you, and I hope everyone's having a lovely day.